every time it comes, it reacts. You so you supposed to react when you come. I ain't even gonna lie. Who the fuck comes without react? You know? Yeah, as you can tell, bro, especially if a good company gap down. If a good company gap down, it's a 80% chance that gap gonna fill. So it's like you should really lock in and focus on that upside potential. Yo, what's up, YouTube? Hey, as y'all can check it out, it's Saturday, man. But I wake up to this shit every day like it's Monday, bro. I'm ready. Yesterday I made a couple money moves. Yesterday, I some shit hit some stop losses and I brought some options and I filled in some positions and some plays. But what I'm about to go over today is about the 200 EMA. So basically, what I do for this YouTube channel, bro. So like, in the future, one day I'm gonna be so wealthy, I'm gonna have to teach somebody about this shit. So with YouTube, I'm really just trying to teach y'all and learn how to prepare myself before I even start teaching them, before I even have 10 plus figures. I don't know how many figures I'm gonna have. An unlimited amount of figures. Like I just want to learn how to, teach it before I get to that point. So when I get to that point, I'm already prepared. It's like people always be wondering and hating and envious of a motherfucker that they don't understand the history of. They're gonna be like, man, how did you become a great teacher? Because I was a bad teacher, bro. It's like people only see the greatness you have. It's like, bro, how did you become so great at this business? Bro, it's because I stayed up late. It's because I read so many books. It's because I studied this. It's because I watch YouTube videos about it all day. It's because I treat it like it's Monday every day and I wake up and put all my energy towards it like it's the first day of the week every day. Man, that's how I've made it. And for you to be envious of someone that made it because they treated every day like it was Monday, for you to be envious of a person like that, it just shows that you really less than because you do less, you put in less effort, less energy, you have less knowledge about the topic, you have less resilience. Like the only people that's envious are the people that's less than, bro. But hey man, what we finna do is we finna tap into this shit, bro. The 200 EMA. Alright, so the 200 EMA is a long-term trend indicator. This green line right here. What I'm about to show y'all first is Walmart. So what I'm about to show y'all is, so basically what I'm gonna ask y'all is Walmart in an uptrend or downtrend? It might be visually easy to tell, but also first I gotta show y'all how to even put this indicator up. So this how you're gonna put the indicator up, right? You're gonna goddamn go to indicators, exponential, moving average exponential, you're gonna click on it. And then when you click on it, you're gonna make sure these are your settings. So this number here, you're definitely gonna have to change. It usually starts out around like 10 or 7, I think. But this is gonna be the last 200 days or whatever time frame you're using. So it's either gonna be the last 200 weeks, 200 days, 200 minutes. But this is a strong trend indicator, and I'm about to show y'all how. So basically, if it's above, it's bullish. If it's below, it's bearish. Let me show y'all. Look at Walmart. It's very bullish. Oh my God. If you would have bought Walmart last time it came to the 200 EMA, you would have been up 76%. Every $1,000 you invested would have turned it to 760. So think about that with your income tax return. Like if you save 1,000 bucks and you turn 1,000 into 760, and it's like, damn, you got 760 now. This is last tax season, bro. This is January. This is last January 2024, February. So it's like what you could have did with your last tax money. You could have made 76% on it. Next thing we got is Apple. We're gonna check out Apple trend. What is Apple trend? You see that trend is very bullish, very up. Every time they go up under the 200 EMA, they only up under it for a couple seconds or a couple days. So it's like next time you see Apple go below this 200 EMA, you should really be analyzing it. And the thing is, when good companies fall to the 200, like Walmart, Apple, think about the companies that's gonna take their position. There's really no company that's gonna take. What company is gonna be better than Walmart and better than Apple? No one. And we also got another company we're gonna look at, Amazon. Like who's gonna take over Amazon? Like you can tell every good company with a good moat and a good business plan and good fundamentals and good financials, like you can always tell that they're gonna ride that 200. They're gonna ride above that 200. Of course, everything gonna pull back. Every stock gonna pull back, but they always gonna ride that 200 EMA up. Yeah, as you can tell, bro, especially if a good company gap down. If a good company gap down, it's a 80% chance that gap gonna fill. So it's like you should really lock in and focus on that upside potential. Wave, check. We went over Amazon. Check this out, bro. Every time Amazon come to that 200, look at that shit. Anytime you look at a company with a great moat and they come into the 200 EMA, y'all better tap in and check it out. Widely used as a benchmark. Look, this is how you can tell it's widely used as a benchmark because you can see how the market reacts to this level like very fucking well. So like you can tell it's many investors watching this level because every time it come to it, it does something extravagant. It does something that makes it look like, oh, it's a lot of money being moved in this market right here. Cause look, from right here, a lot of money made that shit gap up. A lot of money made this shit fall. A lot of sellers made this fall through and gap down. And then buyers made it go back up. And it was just playing around this level. And as you can tell, it keep falling down. So it's like, I ain't gonna lie. You can see the trend right now. You can see the trend on what it's doing. Even on the weekly time frame, you see the trend. So it's like, okay, it's down here it's down here one more time. What is it gonna do again? What is this? What is this? What is ALGN gonna do again? That's when you analyze like the fundamentals and the financials, and you really calculate like, okay, this what could happen. All right, so right now I'm seeing some potential. I ain't even gonna lie to you. Like it has potential to run down to here and bounce as well. So it's like you can't be too comfortable right here, but at the same time, it has potential here to run up. It has a chance to run up. They consistently beating earnings. Let's see what their RSI at. Bro. Okay, look, they got hella more cash. They got way more year-over-year cash flow. They have a good operating margin. They got a good quick ratio. Debt to equity low as hell. Okay. So like they could be great. Damn. Their profit margins fell off. Did their assets increase? Damn. They cash flow increasing like a motherfucker. They operating cash flow. Oh my god, that shit running up. Let me see. But their revenue is down there flat compared to 2023. Analysts rating it a buy. See, I always know an analyst gonna rate it a buy, bro. This shit they always gonna rate it up when these numbers look good and these numbers look good. It's like, all right, so if you do more research, you might fuck with ALTN. I ain't gonna lie. So BAC, check it out. Every time it's coming at that 200 EMA, you can tell it's used as a widely used benchmark. Cause look what happened. Every time it comes, it reacts. You so you supposed to react when you come. I ain't even gonna lie. Who the fuck comes without react? You know? But as you can tell, this is used as a widely used benchmark. So it's like every time you see it come up here, you see what it do. You see what it do every time. This is the trend. So it's like it helps you identify the downtrend. And now look, once it got above and held, you see what it did. You see what it's doing. It's holding that shit. So like if you would have bought here when it held, you would have been up a good 50%. And shit, right here you would have been up a good 23%. So it's like, damn, I could have invested $1,000 and made $223 on it, and then I could have repeated the process. It's like that's why this shit is intriguing because it's like you can really. That's why this shit is so intriguing because like you can really build some long term wealth like that. That's what this shit is about. All right, so now I got some shit that's finna replay for y'all. This is back in on May 2nd. I'm about to show y'all what happened. All right. So first thing first, let me go over these candlestick patterns. Boom. This is what we about to do. We about to look at some great entry points with the 200 EMA. See, okay, if you watching this, you're a beginner, right? And you don't understand candlestick patterns. Okay, I'm gonna make a video about that shit. But listen, this is what you need to understand. This is what you need to understand. This is the highest price point of the day. So look right here. The highest price point of the day is what? If you look at the left, up at the left is 111 and 2 cents for this day. So this the highest the price went. And this the lowest the price went. It's all the way at the lowest, right? And that would be 107 and 81 cents. So whenever you have a counter that look like this, that has a long ass skinny stick, right? That means price was once up there, but it came back down. And when you see that long ass wick at the top, especially after 200 EMA, that gives you, it's called a pin bar or a doji. It gives you a strong confluence that if it's rejecting that price, it's gonna keep going in the other direction. Wherever it's rejecting from, it's a high chance it's gonna keep going in that direction. And that's what you're about to see right here on this stock. Price was up here, and price went up there, and then price rejected because of that long wick off the 200. Every time you see some wicks on that 200 EMA, it offers a high chance that it will reverse. But you still need more things that's gonna give you that confluence that okay, this shit is gonna drop. I should fast forward, but yeah, man, no wicks off of that 200 EMA. It don't play. Then you can look for bullish engulfing off the 200 EMA, or bearish engulfing off the 200 EMA. You can look for a whole lot of different patterns. But all right, so now I'm about to show y'all CVS, right? And y'all about to see CVS wick off of the 200 EMA and drop the hell. Look, every time you see some shit wick, it's gonna drop the hell. Even right here, it wicked off. But that shit not 100%. So it's like, damn, what could I did when before this shit fell from $63 all the way to 52? It's like, yeah, you can make money off of that by puts. And then it's like, y'all might not even know what put contracts are. So it's like, that's a whole nother level to get into. But yeah, look at that shit. And even if you don't know how to buy puts, at least this could be a sign to tell you not to buy shares. Like, damn, like who want to buy shares at $62 just to wake up in 15 days or something, and all your shares worth 44? This sign right here could have told you not to. This sign could have told you not to lose 27% of your money. Cause it's like, why invest $1,000 if you know you're gonna lose 270? You want to invest $1,000 when you know you got the highest amount of chance of winning that shit back. And then I'm gonna look at something that's at the 200 EMA right now that's could be good buy opportunities. Damn, this video long. Like Sherwin-Williams right now is at its 200 EMA and it's holding this support level right here. It's holding this level. It's kind of a zone. It's holding that zone. But it could also come down to where that gap left off at. So it's like this could be on your radar. And then it's like if you want to use 200 EMA for a position, you'll just, set yourself up like this. That ain't a big enough percentage for me. And then you want to just analyze their fundamentals. Like, is their revenue growing? Is their revenue growing from last year? Is it staying the same? Is their net margin increasing? Or is it staying the same? Are they saying great things? Do they have great things coming in the future? And then the same for waste management. Then you also want to check out these Oh, dang, that shit ain't increased. It's still okay. Look at that operating margin though, and quick ratio, debt ratio, ROE. They got some good ratios. Um, yeah, they being earned like they earnings growing. Like you can tell they not no dweeb with the earnings. And look, they net margin increasing like a mug. And they year over year, they operating margin is increasing. I don't know if it'll increase next year though, cause this shit been falling off. But yeah, so that's how you use the 200 EMA to help you out. Like the shit bounced off the 200 and ran up 15%. So it's like analyze some shit that's bouncing on the 200. If you analyze that it's a great company bouncing off the 200, you will have a good chance of winning. If not, make sure you make a calculated move and make a move with the smallest amount of risk you can with the biggest reward. That's what life is about, bro. Like getting a big reward without risking. Well, it's not about without risking because you're risking your love, your time, your patience, your energy. You're always gonna risk shit. From driving a car, you risking shit. From walking out the door, you risking shit. From carrying your gun in your pocket, you're risking shit. You're not supposed to. It's you always risking shit. You feel me? So just risk calculatively. You feel me? If you're gonna risk getting pregnant or having a kid, you can calculate and minimize your risk. Condoms and birth control. You feel me? So it's a risk with everything. You just gotta calculate the shit and make sure you're gonna fucking win. Appreciate y'all for tapping in, man. I do this shit every day. Eat, sleep, dream, work, shit, shave, trading. Yeah.